just announced an upgrade in the resource up to 2.4 million tonnes containing copper. I'll talk a little bit about the background of that resource in the later slides. But that puts us now as the largest undeveloped copper resource in Australia. At the higher cut-off of that we used previously on the 0.15, that would have been, we'd still be the second largest undeveloped in the country. It's only a couple of hours north of Perth, and near the town of Wongan Hills. It's in an area that no one's traditionally associated with finding copper, so it's been off the radar for a lot of companies. It was done by Dominion about 6-7 years ago was the first resource published, and then it was developed initially by First Quantum Minerals in joint venture with Caravel, and then we've been developing it to the next stage over the last 3 years. It's got a lot of very special attributes, which is why we were attracted to the project when we got involved. The location being a key one, but the access to the existing infrastructure is a huge asset for these types of projects, and substantially reduces your operating risk and your capital cost. I'll talk about some of those things a bit later on. The other advantages that have been touched on by some of the other people speaking today. Dave Franklin mentioned that one of the emerging themes is the political risk that's plaguing a lot of large developments, particularly in South America and Africa. We're happy to be in an area where we don't experience too many of those problems at all. Freehold land, native title's been settled, and we get on well with our neighbours. One of the things that's happened in the last, couple of weeks, months, is another world-class discovery was announced in this area at Gonaville deposit, Julimar with Chalice. It sort of happened in a way that not many people would realise, but there's now 3 world-class ore bodies sitting in the southwest of Western Australia. The Greenbushes lithium mine out in the south, Boddington gold mine, largest gold mine in Australia, one of the top gold mines in the world, I think number 6, and Gonaville as a deposit. Caravel's not quite up there with some of the big copper ore bodies, but we're in good company. There's a story behind all of that. These are all Archean deposits. They're all within a relatively short space of time. They've all been formed, and it's a really interesting emerging story that we're right in the thick of. And it's a story for another day, but it's something I'm sure you'll hear more about later. The details we'll talk about a little bit today are based on the 2021 scoping study we just released last month, or earlier this month. That was based on the previous resource. So that study, the resource used in that study was about 1 million tonnes less contained copper. It was published in 2019. But even basing even on the old resource, the new study found we had an NPV of around 1.4 billion, and that was the reason we updated that study was to factor in a lot of the increased costs that the industry is seeing lately, particularly labour, materials, which have gone up quite substantially. There's significant upside from where this study is now, and that's what we're focused on in the PFS, which will be completed early next year. There's upside in the resource, there's new higher grade in the shallower parts that we'll bring in the mine planning, and there's opportunities for some further cost reductions. The key to a project like Caravel's scale and simplicity. Been involved in lots of smaller projects and various types of projects, and I'm sure anyone who has been through developments knows that there's usually just 1 or 2 things that take up most of your time, and it depends where you are, what they are. They might be social things, they might be technical things. The beauty of this project is that technically it's extremely simple. It's bulk, conventional open pit mining, large scale mining, we're using large equipment. We've got the opportunity to take advantage of all of the things that are going on in that bulk mining, particularly around autonomy and electrification, which I'll talk about a little bit in a moment. And many of those things have been pioneered here in WA. The resource model is relatively straightforward. We've now been able to convert over 100 million tonnes into measured, which will come into the first 5 years of mine life. So the resource risk now is very low. Metallurgy is extremely simple, possibly because this ore body has gone through a granulite facies metamorphism. It's made all of the copper very amenable to high recoveries. So we get high 90s in the rougher, and then we clean that up into the low 90s recoveries. That's essential for these types of lower grade ore bodies. Very standard processing flow sheet, nothing unusual about it, and importantly, we're on the grid in the southwest grid, so we get very cheap power relative to being a standalone project. All of our logistics and other issues that associated with servicing a large project like this are very simple. We're on a heavy haulage road that runs straight past the mine gate down to Bunbury, where we'll be exporting from, and we produce a very high quality concentrate with very, very low levels of impurities. So it makes it very marketable and very sought after. And importantly, the tails and the waste, there's no acid mine generation out of these materials. Starting off with a low sulphide content has some advantages. We take out virtually everything in the process of making concentrate. So we have very minimal environmental issues, both due to the location and due to the nature of the ore body. That all adds up to a cost structure that's very competitive, under $2, around $1.90 a pound, which gives very good margins and prices, and a fast payback. A lot of people would be surprised how you can get that type of low cost structure off a low grade mine, and that's I think that's one of the things that's often misunderstood. Although these types of mines are very common overseas, around 0.3 copper is the average grade mined in North America in all the mines there at the moment. So this is exactly like what's being done very commonly outside of Australia, and those mines are making very good money, particularly at the moment. Oops. That's just a quick breakdown. I just want to talk a couple of slides on cost. Because it is the first question everyone asks when you say, well, you can mine an ore body at 0.3. I guess if you're a Sandfire investor, you probably think that's a geochemical anomaly. And yet Sandfire reports a cost of $1 a pound, and we're reporting $2 a pound. But we don't have to spend the money on exploration and development and sustaining capital, which, if you look at a lot of these high-grade underground operations, almost doubles those operating costs, gets them up close to where we are. Needless to say, when you've got 1 billion tonnes of resource, you're not going to be spending a lot of money on exploration every year trying to replace it. There's 30 years mining ahead of us before we need to replace it. And then there's a lot of opportunities to do that, but it won't be a very substantial spend. And the capital is mostly up front. The sustaining capital is very low compared to these high-grade underground operations. So they can be very competitive. And mining costs break down pretty evenly between the mine and the process plant. And there's two things in particular to note there. Power on the process side, biggest component of processing, and on the mining side, the strip ratio is the biggest thing. I've shown strip ratio as a proportion of cost based on the life of mine, 1.1 to 1. In the first 5 years, it's half that, 0.5 to 1. So when you think about the sensitivities of those two things, if we weren't on the grid and we were out burning diesel or whatever to generate our power costs would be 3 times as high. And if we had a strip ratio of 3 to 1, which would still be considered quite low, our mining costs would be twice as high. So those sensitivities have a huge impact. It would double our cost nearly if we were looking at something like that, which would still be considered a conventional mine. So that's what drives very low cost. Location being on the grid and very low waste to water ratios. In the future, the thing about where mining's going at the moment, there's a lot of technology going in. These areas are changing so fast. Our guys working on the mining model are having meetings with people, and you don't want to be on the bleeding edge, but they're getting presented opportunities that didn't exist 5 years ago, particularly around what's called now the ACE, automation, communication, electrification. These are the big things that are changing, particularly in open pit bulk mining. Automation's obviously taking a lot of people out of the workforce, but it's moving them into these high skilled, higher paid jobs, and it's making it much more attractive in terms of the workforce attraction to come and work in a project like this, and it's driving down costs. The numbers of people involved in the fully automated scenario, which we expect will become our base case, it will be about 30% of a conventional mining operation. That has a huge impact on costs, has a huge impact on your risks, and it means that you can attract the very best people because you're offering them a higher paid, much more flexible job. Possibly one of their shifts will be in the city, one at the mine, one off. So you're really changing the way mining operations work. On the electrification, because we're on the grid, there's now a very stable, well, mature options for going to grid electrification for the haulage fleet. Batteries are part of that, but we're not sure if they're going to be ready in time for what we want to do, but overhead trolley assist, which is widely used in Africa and Scandinavia, is definitely going to be part of it. And that has a huge impact. Again, that will drive costs down further, substituting diesel for electricity and reducing emissions. It has a huge impact on other things too. The maintenance requirements on these trucks are much lower. Speed of them is much faster. They go up the haul ramp 3 times quicker than a conventional truck, so you have less trucks in your fleet. We think the capital cost is actually not going to be substantially different because you take a number of trucks out of your fleet and that pays for all of the overhead electrification. So they're very exciting things to have in our project. Just talking about the resource, it's grown steadily. It's doubled over the last 5 to 6 years. It's the maiden resource. That's just a function of drilling. We expect that to continue. It's also partly, though, we've started to get a better understanding of the ore body. A big change was when we realised that the 2 limbs of the ore body are actually a fold, folded over on top of each other. This is all part of the old history of this project. It formed as a porphyry 2.9 billion years ago, and they've got caught up in a Himalayan-style mountain building event that smashed it and folded it. By folding it over, it gave us 2 things. It doubled up the limbs so that the pits drive deeper. Those are the old 2019 pits. The new pits go substantially deeper again. And it also seems to have not only recrystallised and made the ore better metallurgically, but it's squeezed it into some high-grade zones. So we're focused on taking all of it as a bulk mining operation. But if you look at the grades, and they're sort of a bit small to read, but in that infill drilling on the top right-hand section there, all of those grades are up in the above 0.35, many of them 0.4s. So they're substantially higher than the resource grade. The other thing to note is 150 metre continuous intersections, sometimes more, and there's no gaps. That's just a big slab of ore in the hinge zone. So that's why the strip ratio is so low, and you can get in there, bulk mine it, not worried about dilution, not worried about moving a lot of waste. The other thing to note in the bottom right hand, or the bottom 2, the deeper drilling has now seen that there's another limb heading off to the east. We haven't got any drilling out in that area. There's a couple of shallow holes, but there's no deep ones. So as we understand the geology of this project, we start seeing more and more opportunities to keep chasing it. And that's something we can apply more widely. There's a 30-kilometre strike length of mineralisation that the Bindi deposit forms part of. So Bindi's about 2/3 of the way up there. Dasher's the other large deposit. There's a couple of 100 million tonnes at Dasher, and it used to be about 1/3 of the resources now. It's less now because we've been focused at Bindi, but I think there's every opportunity to substantially upgrade Dasher in terms of tonnage. And there's high-grade zones all through this area too now that we now recognise are associated with fault closures. So we're going to do more work targeting some of those fault closures, see if we can bring some high-grade tonnes into the early schedule. There's not much point trying to find a lot more of the same tonnes because they'd be sitting 30 plus years out in the mine schedule. So timeline to final decision on this project is end of 2024 and then about an 18-month, 2-year construction period. Right now we're focused on the PFS to be completed early next year. So there's a lot of activities going on right now. We're on schedule, things are moving along well. And the resource today is a key milestone on that. The mine planning's now in full gear, and that PFS will come out probably, the work will be largely complete by the end of the year, but it'll probably be reported by January, sometime in February. Thank you very much.